Daily Cycles here with a quick update on January the 17th. So I'm back from my 1 week holiday, and let's have a quick look at the market. I'll do the normal weekend video sometime tomorrow or Sunday, but last time I suggested that bears, they did have a chance for a washout, but we needed to see strong selling to confirm that, and well, they failed. So last time I drew these two scenarios, but actually, I should have stayed with my two initial ones. This one was quite bearish, but after a short while in this correction, I felt that it would not be that bearish after all, and well, that green one, that's the one I should have kept there all the time. A quick mention about the 4-week cycle down here. The green cycle was the original one. It has been there stable since the bull market began in 2022, and then the cycle changed around here in August, and I said we have to see if this cycle now stabilizes in this new black configuration, or if it snaps back into the green one after a while. And let's have a look here. If you see this low, that actually corresponds with the old 2-week oscillation low. And if we go to this low, it also corresponds to the old previous cycle. And then we have this low. Well, it was a little bit early, but it almost corresponds to again to this 2-week oscillation low. So I'm curious to see if we actually are snapping back to the old original cycle. So at the moment, I don't trust anything what this cycle tells me, so I have to use other tools. But anyway, we have completed a correction, so now everything should be bullish at least for the next 4, 5, 6 weeks. But I am looking for a major or a possible bull market top around late February. So I think I just want to switch quickly over to the Dow Jones Industrial hourly data. So here are my two general rally scenarios in green and blue. The market should kind of follow these two after a completed correction that would confirm that the correction is over and that we are in a rally phase. And so far this looks very promising. And this correction we had is actually a very much ideal 3-drive correction low formation. And I have drawn here a black trend line showing you, well, here is the 3-drive. And the Dow Jones did not follow it. It didn't follow it perfectly, but almost. So here you see what happens. You have downswing, and we hit resistance. Well, actually Dow kind of broke it, but we hit resistance, we make a lower low, then we have a breakout, a false breakout. We can't rally, then we drop down again, and we back test this trend line, making an even lower low, and then we rally. So we have 1, 2, and 3. Perfect. So now we rally, and this kind of guarantees an uptrend, as I said, for at least 4 weeks, or I think at least 5 weeks. That's the general guarantee after such a completed correction. We should at least rally 5 weeks. I quickly forget, but I think it's 5 weeks, but it doesn't matter. So looking at the S&P daily data wavelets and my primitive tool for finding market lows, I place this rectangle of 26 trading days at this wavelet top, and it tells me I should look for a low around this right end of the rectangle. And as you see here, it was not perfect, and that happens. Like if you go back here, often we make a double low with each low at each side of this rectangle. Sometimes it works perfect, but here I actually thought this was a completed correction, A, B, C, and I thought we would rally, but then we kind of broke down a third time, and I said, well, we could have a washout here, but time is running out for bears, so we need strong selling momentum and continuation to the downside. Otherwise, we will snap back up again, as we did. So this primitive tool didn't give us the perfect low, but it told us it was in this general area. We had a false break below this moving average, and now we rally. But we have to look out for a sabotaged rally, meaning we cannot establish a steep uptrend, but we have these downswings, making it a more sideways move. So it will be interesting to see, because if this is a major or a bull market top in around February, I think we should see some warning signs. So let's see about that. I have my 17-week cycle, and I think I drew these two general scenarios a while back ago. Again, we should rally into, well, this is suggesting I think early March. So if everything is bullish, we should have the green scenario, another steep uptrend, and everything is just great. But if we see a more sabotaged rally, we could have this black one, struggling to have a real breakout to a new all-time high. Well, I definitely do expect a new all-time high in February, but we have to see how this behaves and how the market behaves, the market breadth. Are we seeing some divergences? Are some sectors showing weakness? Are we getting these Hindenburg omens and so on? Generally, I seldom talk about market internals, but I do follow that on my own. Not sharing that much here, but yeah. So I think that was it for this quick update. This is a completed correction. It began early December and it lasted for almost, well over a month. It should be, well, just over 1 month. Yeah. Well, you know, the normal correction is of about 4 weeks, 4 or 5 weeks. That's perfect. Yeah. So the bias is uptrend well into February. So see you later this weekend. Bye bye.